evening, ladies and gentlemen. How do you do? I'm your host, Seth Julian. Welcome you to today's briefing session. We're going to take a look at two commodities today. One that we've been studying all week and that is just turning out to be a very good trade. Gold has penetrated the 50% Fibonacci retracement on any graph, not only the daily graph. But the point I want to make is it's above 1840. It's now at 1865. Well on its way, or halfway, about, to 1894. 1894 is the 61% Fibonacci retracement rate. Let me just review for those of you who are unfamiliar with the Fibonacci retracement. Let me show you how this works. The Fibonacci retracement is a tool that's used, it's a mathematical device that's used to trace, it's too much data. It's used to trace the movement of price from a high to a low or a low to a high. And these different percentage rates, the 23, the 38, the 50, the 61, 78, etc., as you can see, here's an example of the 38. It plays an obvious role in price movement. Same with the 23%. You see it doodled around there a lot. So, not always, but sometimes, these levels are important indicators. For example, in this case, I come back to where we were, the more detailed image we had a moment ago. This shows us that we are now at least, well, let's call it day 2, above the 50% retracement rate. I would say another day, perhaps the end of the week. If we can close above 1844, we're headed to 1894. 1894 is the 61.8, this 61% retracement from the high of November 20, and it looks like that's the way it's going. Volume is fairly strong, slightly dropping off. I do want to point out again that the large speculators are net long, which is a good indicator for us. The red line here in the Commitment of Traders report is the large speculators, and they're net long. So that's where we're looking with gold. Hold on to that gold trade. It's playing out very well for us. The next thing I want to present to you is this. This is natural gas converted. This is the European contract in green, the TTF Euroland natural gas contract. And this is the U.S. gas contract. And I've converted them to be the same unit value. Those of you who know this contract know that the European contract trades in euros, obviously, and for megawatt hours is the unit. And the U.S. contract trades for dollars, obviously, and it's millions of British thermal units. So I converted them both to dollars and both to thermal units, and you get this scale. And this shows you beyond the doubt. U.S. gas is selling at 420 handle, and European gas is selling for $22 for the same quantity. That's I'll tell you exactly what the difference there on that is. Here we go. I'll tell you one sec. The difference between the U.S. gas contract and the European gas, this is 4.21, excuse me, 4.21. And the European contract is 22.62. That difference is a 437% difference. But the point I want to make is they're entirely correlated. This is a coefficient of correlation, this histogram here. And it shows us that it's had been. It fluctuates. Right now it's correlated at barely not correlated at all, because the zero line is random. Above is maximum correlation, below is inverse correlation, which is also a kind of is correlation. So gas is falling on rising volume. We anticipate this to change. We don't know when, but we do anticipate it to change. In the meantime, they are falling, and we're short natural gas. We don't have a good reason for that, but we can read the charts, and it's clear that these prices are falling on tremendous trading volume. So we're short natural gas, looking for the turnaround as the winter unwinds or continues to play out. So, ladies and gentlemen, that's going to do it for now. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Khalas for now.